In the second quarter of 2022, Tesla reported revenues of $16,934 billion, about $400 million above what Wall Street expected. While the company's third quarter earnings were slightly above this, Tesla expects even higher numbers from increased Q4 production and deliveries, which could drive up its revenue and potentially cause its stock price to rise as high as $1,000. Hey everyone, and welcome back to Everything Tesla Stock. Tesla recently disclosed its earnings for the third quarter of the year. The car company recorded a total revenue of about $21.45 billion, which, although short of analysis estimates, is still an impressive performance. The company said it had about $21.45 billion in total quarterly revenue, a 26.8% increase from the second quarter of this year, and 55% from last year's Q3 figures. The automaker also made about $3.3 billion in profit, which is a significant increase from the $1.6 billion reported during the same quarter in 2021. During Tesla's earnings call for the just concluded quarter, Elon Musk revealed what his new expectation is for Tesla, and why he believes that the car company is soon going to overtake major companies globally and become the world's most valuable company. What factors are going to contribute to Tesla's increased revenue then in the future? Keep watching to find out, but before we get into it, don't forget to like and subscribe to keep up to date on everything going on with Tesla. And don't forget to turn on notifications too. Earlier in October, Tesla reported that it delivered 35% more vehicles in the third quarter of this year than in the previous quarter. While Tesla did not meet expectations from some major analysts, the Q3 earnings did indicate significant ramp-ups in Tesla's car production and sales, especially at its major markets, where disruption from the pandemic had slowed down production, leading to lower sales. However, although there are indicators that Tesla is still improving and keeping up its production rate, it will not reflect in its stock price, especially in these past few weeks. Shares of the car company have plummeted massively, recently dropping down about 50% from record highs last November, and causing panic among investors who fear a global economic slowdown and a possible crash in Tesla's stock price. Meanwhile, following the recent release of Tesla's third quarter earnings, Tesla CEO Elon Musk has reassured investors of a promising Q4 for the company, adding that Tesla is on the path to overtake leading global companies like Apple and Saudi Aramco. Musk stated that Tesla will, in the future, be worth more than both companies combined. He said, "I see a potential path for Tesla to be worth more than Apple and Saudi Aramco combined." Now, that doesn't mean that it will happen or that it's going to be easy. In fact, I think it will be very difficult and require a lot of work, some very creative new products, mass expansion, and as always, luck. Tesla's market cap is now under $700 billion, while Apple's is worth $2.3 trillion, and oil producer Saudi Aramco is worth $2.1 trillion. While Musk's statement revealed a potential future value for Tesla, it is obvious that the car company needs to do much better to exceed these companies in terms of market cap. Saudi Arabian oil company Saudi Aramco recently announced its financial results for the second quarter of 2022, posting a 90% year-on-year increase in net income and a dividend of $18.8 billion to be paid in the third quarter of this year. The company continues to strengthen its finances while maintaining a high investment-grade credit rating across its market cycles. Likewise, Apple also recorded about $97.28 billion in revenue in the second quarter, and was up 8.59% year-over-year, with an earnings per share value of $1.52. These are very high earnings, no doubt, but Musk believes that Tesla has sufficient projects on hand and in the works to eventually achieve even higher milestones in the future. How's this going to happen? Well, Tesla's been constantly ramping up its EV production at its gigafactories, and its new factories in Texas and Berlin have crossed significant milestones. Tesla's Berlin factory recently announced it had ramped up to 2,000 EVs a week for the first time, and the company's facilities in Texas had also hit a significant milestone, with its 10,000th Model Y ever produced since the factory opened in April. Likewise, the EV maker plans to focus more on production of its 4680 cells. Although Musk has previously admitted that there were difficulties in getting the 4680 cells, the Tesla CEO also recently hinted that there could be some progress as the ramp-up in 4680 cells is growing exponentially. With Tesla's production volume tripling quarter over quarter, the automaker aims to optimize cost while providing value for its investors. Tesla stock has been on a downward trend for the past few weeks, and analysts believe that there is a need to make critical effort toward driving up the stock price. According to Musk, Tesla may be expecting a share buyback soon. Although he didn't state when this is going to happen, he did say that it is certainly possible for Tesla to do a buyback on the order of $5 to $10 billion, even in a downside scenario for next year. He added that even if the coming year becomes difficult for Tesla, it is likely that the company still does some meaningful buyback. Also, Tesla's FSD beta software is gaining more grounds, and as EV companies and users are becoming aware of the advantages of having this software and how easy it is for their experience with an EV, well, it's going to be interesting to see how that turns out. If Tesla does continue to increase its car production and delivery rate while providing value for its consumers, it could eventually raise revenue to such high levels which were predicted by Musk. And with Tesla's market cap at such a high level, the company's stock price could skyrocket up to a $1,000 mark in the future. It has no doubt been a tough year for auto companies, who continue to struggle between inflation and supply chain shortages. Earlier in the year, most car companies struggled to increase customer demand because of supply chain issues and shortages of key materials. Likewise, the harsh effects of inflation have also further caused a rather difficult market environment. Although the plunging economy in recent months could signal a decline in demand, Tesla claims that it's got no problem with its demand and is rather focused on ramping up vehicle production. According to Tesla, the automaker's major constraint is with its battery materials, as well as its transportation capacity, which has made it rather expensive and complex to deliver vehicles. The car company also stated some logistics challenges would also persist, with its fourth quarter deliveries growing by less than 50% and production higher by 50%. There is no doubt that Tesla is finding it difficult to pull through with its delivery efficiently, coupled with the lingering effects of inflation. However, the automaker has proven to be capable of surviving the hard time. Musk also confirmed this with analysis in a recent conference call, stating that while Tesla is not recession-proof, it is recession-resilient. Musk also reassured investors of Tesla's excellent demand in the fourth quarter, further addressing their concerns that buyers could be discouraged by the weak global economy and high prices for Tesla vehicles. According to Musk, Tesla has excellent demand for its fourth quarter, and the company expects to sell every car that it makes in the future. It is almost certain that an economic downturn is not playing any role in Tesla's planning, as the EV maker is set on aggressive growth. Tesla has repeatedly said that it's going to be aiming for 50% growth this year from the 936,172 cars delivered in 2021, and it is obvious that the automaker is making efforts to do so. Tesla is the world's largest automobile manufacturer by market value, and in spite of the rising production costs, unexpected delays in some of its factories, as well as logistical issues, the EV company still beat several analysis expectations and estimates for its third quarter profit. The company's adjusted EPS surged 69.4% year over year to $1.05, despite the negative foreign exchange impact it experienced as the US dollar strengthened against other major currencies. According to YouTuber Dave Lee, while it is very commendable for Tesla to set such a high financial goal, it needs to be backed up with execution. Lee believes that Tesla is a hardcore technology company that is tackling some of the world's most difficult problems, and thus it will be able to create more value for its customers and further heighten its growth margins. Tesla is growing fast despite global economic downturns, and investors are closely watching for signs that consumer demand is cooling as inflation surges and interest rates climb. Although Musk's promise of a roughly $4.5 trillion company may not be enough to turn bearish sentiment around, it is the glimmer of hope that most Tesla investors need to continue staying bullish on the car market. Also, Musk did not include Tesla's Optimus and AI project when citing possible factors that may contribute to the automaker's high revenue in the future. While this may seem prudent on his part, there's no denying that a Tesla bot could further strengthen and heighten revenue. And if that turns out to be successful, we might see that happen. Do you think Tesla's going to be bigger than Apple and Saudi Aramco in the future years? Let us know down below, and if you want to know what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.